Hey guys, what's up? Welcome to this channel. It's your boy Sammy. Still, if you're new to this channel, please don't forget to hit the subscribe button and also leave a comment at the end of this video in case you have a question for us to give attention to. Now, in this video, we're going to be talking about technical analysis. Technical analysis has to do with the historical price action in order to identify patterns and determine probabilities for future movement using indicators. Now, take note of the words I use: historical. Now, when you talk about anything that has to do with history, it means something that happened before. Now, technical analysts always believe that history is bound to repeat itself. So we base off of our trade based on what has happened in the past. Now, you don't want to come into day trading as a beginner and look for potential entries and be like, whoa, let me just enter here. I think this thing is about to go up. No, you're going to be wrong. Because why? Check your history. Has it happened before? What happened? Let's say you want to trade and you go back to 3 years back and get to understand if that strategy was actually playing off for you. So you want to be on the safer side. And the next one is indicators. Now, you don't want to trade on an empty chart without using your trend line. You don't want to be trading an empty chart without using your trend line. You're going to be wrong most of the time. Because why? You don't know if what had happened in that market like this. So without using this indicator, you wouldn't have known that the trend line was actually broken. Now we're going to move diving right in. In this tutorial, I'm going to be using two indicators. One, trend line, and the second one is um, Fibonacci retracement. Now, the trend line, I'm going to be using it to understand what the market trend is. Now, let's talk about this future market trend. As you can see here, I'm going to show you something here in this chart. So, this market actually here was trend line was actually broken. It was bearish. It was actually bearish before the trend line got broken. So after the break in trend line, I think this is a head and a shoulder pattern here. I'm going to discussing it in the future, so just hold on. So now this trend line has been broken actually, so we want to start looking for price moving for a retracement before actually moving back downwards. But initially, if you can look from here, you will notice that this market just reacted to this other block here. See, it reacted to this other block, so it's not really, we are not really actually bearish. We might still be retracing back up to where we have this double top here. But like we all know, prices can be crazy most of the time, so it really might not get there. It might retrace, and just like that, we just want to be safe. That's why we always tell traders to always risk what you can afford to lose. So diving right in, we want to understand the first one. We talked about trend line. Now let's identify from here. This right here was a pullback after the market gave us an indication that it wanted to move in an opposite direction, and market has been in this range for a while now. So after drawing our trend line, we want to go down to the 30 minutes. Please always take note of the analysis that I do. I do then from the higher time frame and walk down to the lower time frame to look for opportunities. See, this was the trend line that I drew in the higher time frame. It becomes bigger because of the number of candles here. But if you go down to the 4 hours, you see that it's a little bit smaller. Let's go to 1 hour. See, daily, sorry, it's a little bit smaller. So you just do analysis from the higher time frame. It makes you be on a safer point. Going down to the lower time frame to do analysis is going to be giving you a lot of losses of most of the time. So let's dive right in. So we see here that the market, all we are waiting for is this. We want to market to come to a price, an area of what value for us to look for potential entries to ride the market to the upside. But we're going to be getting there straight there. But I want to talk about something. Now, when the market is trending, it moves in two directions. Now, a trending market is a market that is giving us a higher high and a higher low, or in the bearish condition, giving us a lower high and a lower low. Now, while we have a trending market that comes with a continuation trend, we also have a market that comes with a reversal trend. Now, the continuation trend happens to be a market that gives us an example of that is a wedge. Either gives us a wedge, or it gives us a triangle, or it actually gives us um a channel. Now in this case here we see something happen here. This is a descending channel. This market, like we said, is bullish here. From the trend line I drew in the daily, you see the market is actually going up. Currently starting from 8 on the 8th of November till today, the market has been bullish. So we go down to the 30 minutes, and what we want to do is look for opportunities to buy. Now while we're looking for opportunities to buy, something happened here. Let's say for an example, we took an entry here where the trend line is, and the market was trending up, and all of a sudden we see something like this. All you want to do is understand what the market is doing. Some folks be like, whoa, this market is about to reverse, let me just get out. You might be wrong, because the market is taking what buyers are actually taking the rest. And what did they give? Technical analysis, mostly based off of chart patterns, like the example I gave, and the definition I gave earlier. I said it has to do with chart patterns. See, saying this in the future, you will always be aware that price is actually taking a rest. And what did we see price do? It moved upward. Now that is for that. And this right here, the price didn't come back to this trend line, it came here. See what happened? It gives us a rising channel. Now don't forget, I said this one was the what? Descending channel, which was a falling channel, and this actually to be a rising channel, showing that this was the breakout. Now you wouldn't have been able to get the breakout here in the 30 minutes, but if we go down to the lower time frame, let's say 15 minutes, let's see if we can get an entry here. 15 minutes. Okay, I think we got, see, this was a reversal, a bullish reversal candle, showing that the market was still what, trending higher. Now let's go back to the 30 minutes. See, there's a breakout here, but it was what, the rising channel that took price to the what, to the upside. Now what did we see happen here? I've given you two, a falling channel and a rising channel, which they all shows the continuation of a trend what pattern. But this here shows a reversal of a trend pattern. This double top. Double top is an example of a market that shows the market is about to move in an what, opposite direction. Now if we draw a trend line here, you will see something happened. There was a trend line break, and price didn't come back to the trend line. I'll show you something here. It came back to the neckline. It came to the neckline. Just do this way. Okay, let me leave it here first, but let me show you something here. Price came to the neckline. It didn't come to, see, this was a meeting point for you to look for the potential entry to rise the market to the what, to ride the market to the what, to the downside. So all of this happen all of the time, because why? Price oftentimes creates patterns. Now this is where traders miss it a lot. The ability to wait for price to understand what the market is doing gives you an edge. Now if you've seen something like this, and you know, you let's say the market was here and it's creating something like this, and you'd be like, whoa, what's the price doing? You just have to stick back and relax, waiting to see what's next. Price will actually come to you and give you an opportunity to rise price to what, continuation trend to the upside. Now your ability to understand what the market has done is what gives you the profitability you're looking for. But trying to struggle and say, whoa, this is an entry for me to sell, you might be wrong, because why? The initial trend in a higher time frame shows that there's a what, a bullish momentum or a bullish move currently at that what, higher time frame. That is why it's always cool to know that price, what price is doing in the higher time frame. This also is a double top. I think I was in this chart. Let me see. Okay, this is a double top. I draw my trend line most of the times crazily, because I know if I miss the first one, if I miss the first move, I'm definitely going to be looking for neckline. Good. Price came to the neckline, and this actually is the neckline. This last drop down here was the neckline, so price is bound to respect it. That's I'm not actually scared of that. Now let me quickly say this. Now there are two ways to look for potential entries. Now whenever I see a trend reversal, it gives you an indication. Let's say a double top, you're cool. A double top, you get that. You're going to be looking for one. There's the first strategy, and the first strategy is what? Aggressive entry. That aggressive entry has to do with the first one. Now this was an evening star here. This right here was an evening star for you to take price to the downside. Now if you miss that, that's when you start waiting for what? The neckline strategy to look for an opportunity to rise price to the what? To the downside. So, and don't always leave your folks here like for a long time, because why? You never can tell, price always reacts against it. Now another pattern that happens in continuation trend is a triangle. Now this happens to be a triangle. You see, this was actually a breakout, and what you do is you see a morning star here. This gave what? A morning star. See, this gave what? A morning star to right price to the upside. Now a lot of folks will be like, well, I don't understand what price is doing. You just have to wait and clearly, visibly look closely, and you're going to be getting it. Now how do we identify this spot, this trend line, continuation or reversal? It's simple. All you have to do is go to the major swing point, make sure it's touching 2 or 3. Now these are the major swing points, 1, 2, and what did we see? We saw a breakout out from the trend line. And always wait for a pullback for market to come back to that trend line and give you an entry trigger. Once it does that, then you're cool to risk. Don't ever come down here to say you want to risk here without understanding, waiting for the breakout. You're going to be wrong, because why? You don't understand what the smart money guys are doing. You don't understand what the smart money guys are doing. Okay, I think that will be that. And another trend reversal we have, it's, let me look for this. Sorry, let me quickly identify the trend. Okay, like we said, the market trend has come to this. Okay, let me outline this out with a strategy that I always use to trade. Now it's called the Mer formula. I learned it from trading with Renner. I think one of his video he made mention of this, and I applied it to my strategy, and it worked for me. Whoa, man, that's the best strategy I'll be talking about. That's the best, because why? I applied it to my strategy, and it gives me up to 80-95% of my win rate. Now it's simple. How do we do it? Now it's called the Mer formula. It's simple. All you have to do is identify your trade line, and we know that this market has been touching these zones here. So what do we do? Let me take this out. What do we do? Now it's simple. We can see here, let's go back to the daily. We can see here that there's a little bit move, a high, like a move to the upside. So what we're going to do is we want to wait for price to come and touch these zones here. So once the market touches the trend line, let's say for an example, this market was just here and the trend line was somewhere around here. Okay, let me just, okay, the trend line was just, the market was touching the trend line. So what you want to do is wait for it. Understand the market trend. Okay, the market trend actually currently since on the 15th of November it was bullish, down to 20th of January it's been bullish. So what we want to do is we want to be looking for buys currently until we see what a market change indicator, which shows that the market is about to move in an opposite direction. But for this case, we want to be looking for bullish. Now wait for market, like I've identified this. I'm waiting for market to touch the trend line. I go down to my 30 minutes. We call it an area of value, since we know that the market structure is bullish currently, and the area of value which is touching the trend line. So we're going to be going down to the lower time frame on the 30 minutes. Now what are we doing here? We're waiting for market structure change indicator. Now what does market structure change indicator? It shows a double top or a head and shoulder pattern. Now let's see which of them the market gave to us here. Good. I wouldn't lie to you, I'm just seeing something else. There is nothing like a structure change here, so I'm not going to be getting involved here because it's too risky. I don't know, so I'm going to be waiting for a trend line break. And what did I see? I'll be waiting for the market to come back to that trend line. Good. I'm seeing something here. Good. See, I see a double bottom here in that area of my trend line. So the market later came down to it. Let's see what the market was touching. Yeah. Good. See, this was the last drawdown. Let me take this out. Okay, let me quickly say why I'm leaving this to my trend line here. The reason I'm leaving it here is because I want to look for a trend line break before getting involved. So I got my trend line break and I got a double bottom, which shows the market change indicator, a double bottom here. Now what I want to do is wait for an entry. Wait for an entry. And what did I see? It's not just getting an entry. I don't just get an entry. I wait for market to come to this major last institutional order block. Now what did I see here? There was a break in structure in that institutional order block. Sorry, yeah, I think there was coming. Okay, I got what I was looking for here. See, this spike up here actually took the money that was resting here. So I know the market is about to turn bullish. Finally, they've run out the money. So what I want to be doing here is get my entry. And what did I see here? I saw a reversal here. I saw a reversal here. So I'm going to be looking for potential entry. Now, how do I pinpoint my exit? It's simple. I draw my trend line here. From this my entry zone here. I like to use this. So immediately I get a trend line break, I'm out. Sorry, you might be saying, wow, why are you getting out of here? I'm getting out of here because I got a trend line break, so I'm cool with that. But guess what? I think I'm going to be doing another analysis here. And what did I see price do? I saw price came to the zone, but I'm not sure about this. That's not my strategy, so I'm not going to be trading it. I always want to be sincere with myself because after seeing a lot of things, a lot of shit that market does, so I was like, I need to stick to my word strategy. I need to stick. So I've shown you how I use the MER formula. One, I look for market structure in the higher time frame, and I know that the market is bullish momentarily, so I go down to the 30 minutes. No, wait, sorry, I go back to the 4 hours, stay on the 4 hours, and I wait for market to come to touch that area of my trend line, which is very important. And I want to wait for it to give me a change in indicator in the 30 minutes, and immediately I get that change in indicator in my 30 minutes. Say something happened here also. This market came to this trend line here. So this is a double bottom. If you want to add this, it might become a triple bottom. So but I think it came back to that last stationary order block that ran market to the downside. So that's how I ride my market to the upside. Now what did we see happen here? See, I told you I always wait for the market to come to the trend line. See what happened here? I got a bottom here, one, and this here also. This was a double bottom for me. It was cool for me, so I'm going to be riding the price here. And always I discovered that whenever I use this strategy, my risk is always low. Now take for example, and I'm entering this trend line here and I'm putting my risks below, so it's going to be somewhere here. So, and I draw my trend line here. I'm going to be cool if I get involved in this chart here and my trend line is somewhere here. Good. Immediately I get that break, I'm out. That's me. That's my own strategy of trading. That's my own strategy of trading. So it works for me. So I always tell traders, not because you see a lot of folks get involved in the chart and they are making so much money, you want to do like them or you want to trade like them. Please always stick. What works for you doesn't work for them, and what works for them doesn't work for you. So it's always advisable to stick to what works for you a lot of the times. Okay, the last thing I want to be talking about is Fibonacci retracement. Now let's go back to the 30 minutes. first 4 hours, sorry, and we've seen something happen here. Now 4 hours is giving us something here, and it's crazy. I'm going to be showing you. This was a trick, but it's not supposed to be part of this video. I'm going to be adding it up. It's not supposed to be part of this video. This was a trick. See, this was a rising channel, and actually there's a breakout. I was in this chart, man. I was just waiting for the market to like just pull back here and just give me an indicator for me to like start selling. But whoa, I got a breakout also. It was so funny. I was like, whoa, what's happening? So I always tell traders, please confirm your strategy before what? Before getting an entry. And do you know what? You can actually sell and buy here. Like I said, this is not supposed to be part of our video, this video, but I'm going to be dropping it here. So since we know the market is bullish here, what I want to be doing here is I'm going to be selling and buying. What did I see here? What I saw here was a rising channel. So what I'm going to be doing here is I go down to the 30 minutes. It's a strategy. It's crazy. It's crazy though. See, what did I see? I saw a double bottom market structure change indicator in the 30 minutes. Market in the trend line. Don't forget the big trend line that I just drew. This was the overall, the one below, and this one is just a little channel. So what I'm going to be doing is I'm going to be waiting for where I'm going to be risking very low. This is crazy. This is a triple bottom now, and I get involved in this chart. And let's see, I would have been stopped out here, but I'm going to be waiting for the next one. Now the market came right up to this point. Now that up one, see my risk now is very low. See, I'm going to be getting involved here in this chart. Here is an evening star, so I'm going to get involved here. I don't care. I'm going to be risking very low though, because I know I'm trading against the trend. Now for those folks that be like, oh, how do I trade against the trend? Counter trend trading. This is it. Just have to understand what the 4 hours is saying, and you get involved in the chart in the lower time frame. Now I'm going to get involved here and reach, let's say 2% of my capital, and I'm going to be getting involved there and wait till take my price in this zone here. Now why am I saying this one? Because this is the major trend line here. This is a major trend line here, because we know this market is actually in a channel, in a tunnel. So I'm just looking for scalping strategy here. I'm going to get involved. And what did I see here? I saw another strategy for me to get involved. Good. This was the last institutional order block, though it was not clearly broken, but it shows the market about to move in what back to its original highs. So I'm going to be getting involved in this zone here. I'm going to be getting involved in this zone here. And what do I do? It's simple. I'll show you. I just draw my trend line. Immediately I get a break. Whoa, I'm out. That is just how I trade this strategy. It's very simple. It's crazy though, but I always advise folks, if you're trading against the trend, you want to always risk lower. But if you're trading with the trend, you can risk high, but always make sure that you're risking 2% of your trading capital, because that way you wouldn't be able to break your risk management rule, and also break some of your strategy and blow your account at the end of the day. So you always want to stay with the folks that are going high, stay with the market, and that is where you get to win always. Now let me show you this one strategy on the Fibonacci. I talked about that, but I won't be able to cover it all. I want to be able to cover it all in this video. Let me just talk about a few things about the Fibonacci you need to know. But in case you want to get to know about Fibonacci, I'm going to be leaving the description in this video below. So let me just show you a tip about what I'm talking about in Fibonacci. Now when it comes to Fibonacci retracement, we always use it for potential entries, to look for zones where we want to ride the market. Now this market has changed structure. It has given us a double top. Good. We missed the first entry, right? So what we want to do is simple. I'm going to be writing this out. Okay, let's say we missed the first entry, and or perhaps we traded the first entry. Now Fibonacci, whenever you're trading in the bearish market, is a 00 to 100. Sorry, 100 to a 00, while in a bullish market is a 00 to 100. Whenever you draw the Fibonacci, turn it to the right, and that's easy for you to drag around. Now this market came to this fib zone. Each of these zones here is called fib zones. We have the 23.6 pip zone, 38.2, 50 pip zone, 61.8 pip zone. Now the 61.8 is always known as the good golden ratio to right price. 50.0 is also known as the good strategy, and the 38 is known as a good strategy also. So getting involved here, this price came to 50, you're going to be riding it to the downside. So the description is down below for you to watch the video about Fibonacci retracement.